So today is the 27th. We're going to be going over some stock charts, some tickers that I've traded over the last few days, or that I haven't traded. Um, so the first one was yesterday, Laser. This is a cold stock, a stock like AMC, GameStop that a lot of people, a lot of chatter on social media. A lot of business channels cover this stock. So it's always fun to trade because you can get a lot of volume. Um, So, we saw this got volume. We saw it gapped up from yesterday or this, Friday from, 22. Let's mark this level off just because we see, this is definitely, could be useful later. So we see it got volume. So the first thing we want to look at, if it's viable, if a situation occurs, if there's a pre-market high and it opens under the pre-market high, because we want to look for stocks that can reach the pre-market high, and then that can break over that. And the reason, because the pre-market high is the most important level for intraday trading because it's the highest level of the stock if the stock doesn't open above it. So we can see it dumps at the open, which is pretty common for stocks to dump. And then we see a lot of buying pressure, a lot of buys down here. These wicks, people are keeping the price up. You can see, these wicks. And then it breaks through this pre-market high, and then it bases, which is important because now this is, a viable level of support. So we can use that level later on, and we can see it tests this level, and then it holds it, and you get a quick move up. Um, and this strategy, playing bounces off the pre-market high, is very successful. It's works 8 out of 10 times from what I've seen, and it's honestly something that in a market where stocks are running, or in a market where these setups happen, which they haven't been happening recently. But you can only play this and it'll work, most of the time. And really, the risk reward is incredible, especially something like this. So this was at 24.20 was the pre-market high, and uh, there's a lot of psychology in trading, and psychological whole number at 24. So your stops are at 24 when you buy in at 24 too. So you're risking 20 cents for at least a test of this pink line, which is the volume weighted average price. Um, you know, this is the most used indicator, and people use it as a signal of strength or weakness. Um, but yeah, so you buy in here at 24.20, and a minute later, you're at 24.60, um, which is a 40-cent move in a minute. So if you're buying 1,000 shares, you're risking, you know, $200 for a move up, which, you know, given this candle, I mean, this is strong. It uses this as support, so I would, be holding for a lot more. I mean, this is definitely something where it's a all or nothing trade. So your stops are at 24, then you're holding for this move up. If it comes back down and fails this level, which, if it comes back and it tests it again, most likely it's going to fall. But the first test always provides a nice bounce, which is very important. Um, you don't want that secondary bounce is only good for a scalp. So this is the first test, and you get a nice move up, and you end up getting over $1 move here. And how to manage this? I mean, if you have 1,000 shares, even if you had 500 shares, you're getting $1 move. That's $500. That's good for the day. But you're looking for an uptrend to start. We see this area right here, which is a lot of confidence. It's the two most used indicators for traders is the blue and the pink is what I have up here. It's 72.81 simple moving average and the volume weighted average price. And not that these indicators, show anything more than just what people are looking at. So people are looking to buy on this support, and then if it breaks under, they're looking to sell. So that is the only reason why these indicators work is because a lot of people are looking at them. No other like real reason. But we can see two indicators here, which means that this is definitely going to be a strong bounce, and we see a higher low here, which means there's an uptrend. And what I mean by that is this is the low, and then we see a high, and then we see another low, but this low is higher than that low, so it's a higher low. So now, if you are looking to buy here, or you're looking to hold here, you want it to hold this level. So you want it to hold this 24.67. It goes up, it comes back down, and it never breaks through there. So this is where you would sell if you were holding. But you hold for more, and then it never breaks through, and you get a nice move up. I mean, we get a $2 move, 24 to 26, pretty much, risk free at this point. And then it comes back down and it tests this lower high or this higher low level. And again, like I said, the first test is strong, but this is just a secondary bounce, so you're never going to get a nice move up. And then we can see it fail these levels and then it respects it. So now this was support turned resistance to the next day. So you're looking for it to break through here, but shorts are looking to short here. And then it was never really able to base over this pre-market high level that we had yesterday, and it failed to. So, but the trades was yesterday's. This pre-market high. I mean, that's a $2 trade, which is easy setup. No, we won't look at that one. MVIS. So this is actually a very interesting stock. So again, this has been running for a few days. I mean, this is another really, really good daily chart. I mean, if you look at this, just a nice area of consolidation, and it was bound to break out, one day. So again, this is your price target. When you look at a chart like this, where you see this consolidation, you see like this channel here, essentially. You're looking for price targets. So these daily resistance lines are, price targets, so to speak. So again, we want to chart, areas of confluence. We want to chart where we see a lot. So right here, I mean, you have, put it there, 1, 2, 3, 4. So this is definitely a very important level. Here, let me just, I don't want to remove these but we have here, we have here, we have here, and then I think these were intraday level, but we'll put them like right here. We see, what the hell? 1, 2, 3. So this is an important level that we'll mark off. That's probably what people are looking at. So if we look at this, actually, you know what? Yeah. So this has been running for the last couple days. So we see last week bases off this level. So we can see here, I mean, right here, there's a level of, this is resistance, and it becomes support here. And then we move up, and let me go to the 1 minute chart. So we see a flag here, it breaks through, and then right here is actually a really good pattern. This was one of the best trades that I made. This is a cup and handle right here. So we see the cup, so we see a string of like 7, a breakout through here on this wedge. And then we see a cup and then a handle, and then we see a nice move up. And this is a very easy trade. I mean, one, you're looking at a higher low. So here's the low. You're looking for, an uptrend. And then we get a higher high, and then we get a higher low. So not only is this a confirmed uptrend right here, but it's a cup and handle. So right here was the best buy. You don't. It's not necessarily a level, but it's just looking at it, and you can see it forms this. It starts to curl here, which I did see in real time. This is a trade I took. But we see a curl, and then we see, obviously you could have bought it this curl here, but there's not much to really look at, really base it off. I mean, what's your risk? But right here we see a lower high form, and we see a cup and handle form. I mean, this is textbook cup and handle. We'll look it up on Google, but essentially it's like this. But this is, this is a daily chart, so the cup and handle is going to have a much bigger move up. But this one is literally textbook. It's literally perfect. So again, you only got not only, but if you buy in here at 15, 70 and 17.39, I mean, you're getting $1.50 move, $1.60 move on that. Something that's really easy to spot. And then we see a curl here, fails to make a higher low, so it fails the uptrend, and then we see a retest of this level, which is nice, and then just a steady grind up. I mean, for people who are holding for all or nothing, this was also a news play, and it had a lot of volume. So some people were swinging this, some people this is a great day trade there. But if people are holding this for longer, you're looking at the hold here, and it does. So you're not selling here, you're not selling here. You're looking for an established uptrend, which we get. And then it just respects these daily. I mean, again, there's nothing really to see here. This is like a lot of manipulation, in my opinion, a lot of ups and downs. I mean, there's nothing really going on here. It does base on this daily resistance and breakout, but nothing really to play there. Nothing that I would see a good setup. So then it comes down to today, and today would have been a great short. I mean, not to mention it's just extremely overextended after its third day of running or fourth day of running. But we use this indicator, which is, you can see it respects this line, and then once it falls under this line, and remember what I said, these two lines, when they're together, they provide the greatest strength and resistance. So we can see it drops below this line for the first time in, a few days, and not to mention it's extremely overextended. We see a retest, and it fails. And this is where you want to short. So right here, this line is a short, and it's because it can't break through here. And people want the price to be over these lines to show strength, but when it doesn't, lower volume, super extended, you can start a short here at $29, and you get a huge move to 25. I mean, that's a $4 move in literally 8:23, 7:30. I mean, in an hour. In an hour, you're making a $4 move, pretty much stress free, because it doesn't even try to make lower highs. It's just a straight, red candle down. And then it tries to regain it, and this is just like a pop and drop. We see the wicks here. It gets stuffed down, and it just fails. And it does respect these levels. And this has actually provided a great scalp today. So we look at, when you see this straight down, you don't want to buy on this first level. Let's look at a larger picture. But you don't want to buy here, this daily resistance, because it's just going straight down. But then what the hell? We see it bounces here at this 22.40 level, this level that we have, and then it goes up to 23.15. I mean, this is a 60, 70 cent move in literally 1 minute. I mean, if you have what's your risk here? I mean, you're under this level, you're probably cutting it really quick and maybe adding back to under here. But you're getting a 70 cent move in literally 1 minute. If you have a buy set up here, I mean, 200 shares, 300 shares, 70 cents. I mean, that's a couple $100 in literally 1 minute. And again, it retests it, and when you see this retest, a lot of time, I mean, this is 1, 2, 3, 4 retests, and eventually it'll break through. This is also a bear flag. We see, down movement, and then kind of that. I'll show it on bear flag stocks. We see just a string of like they said, a strong move down, and then a flag, and then a breakthrough. Flipped upside down, it's a bull flag, but here's a bear flag, and it breaks through. And again, you get a test here. And again, what we talked about, secondary bounces. Uh, one bounce is good, but you never want to buy back again. Breaks through, and then we get a test here at 21, and you get a nice move up. Almost a $2 move up in just like 10 minutes. Which is perfect. Buy here, sell here, buy here, sell here. But like I said, it was never able to base over this line, and then again this bounce. I mean, you try to play this bounce, you got killed because secondary bounces are only good for scalps and they're weak. And again, it broke through this line that we talked about. But again, it bounces again, and we can actually see it holds this line, which is a good sign for the stock. But in my opinion, I mean, I don't think you'll see anything more. Again, I mean, the bigger picture, a secondary bounce on the daily chart, I mean, is going to be pretty substantial. But I don't think it'll ever reach this $30 target, which it hit this morning actually. But here, I mean, there's 1, 2, 3 scalp opportunities it offered for the day. So this was actually a really good stock to look at. Stocks that are smaller floats, but that are in the $10, $20 range can move much more and provide like insane return with really risking not that much. So this is not much to really chart here. I mean, we'll look at the daily chart, but there's nothing really. I mean, this is nothing like that. No levels that people are really looking at, in my opinion. But we see the number one thing that I see here, which is why it failed, is any stock, not any stock, but most stocks, I'd say 90% of stocks that make highs into open always fail. Sometimes they're good for a pop, but unless it's an insanely hot market, unless the stock has gotten great news or has an incredible volume, stocks that make highs into 930 always fail. And I've noticed around 920 area where you get a huge move up, and you get a move up, and you get another green candle, and then followed by a red candle. I mean, right here is the top, and I identified that. I actually did not short this today. I didn't play this today, but right here is when you get it in, because then it isn't able to break through. I mean, sometimes I've seen a drop and then a pop up here, but most of the time this stock is going to fail if it's making highs in the 930. My thought process is that they run it up and then they dump it on everyone. You don't want that. You want, cheaper. You don't want it to be making highs at 930 because it's most likely just going to get dumped. Not really sure why. Not sure if that's a retail thing or if that's like the market makers running it up because they know they can't run it any other time. People are chasing up here and then they're getting sold on. I mean, this is just a straight dump. NSPR. Sheesh. Oh no, this is a reverse split. Never mind, this didn't move like that. Yeah, this stock did it like a 6-to-1 reverse split or something. But it did grind, which is pretty solid. But it was down today, so I don't know. This is a weird chart. I think Thinkorswim is glitching on me, so we won't look at that. OCGN. This is a lot like that MVIS chart, where it had incredible news. This is a COVID stock. I think this is something to do with like vaccines in India. But yeah, I mean, there's not really much in chart. I think this is just one of the endless where you have. I mean, there's definitely maybe some patterns we can point out, but this is just a stock that's based on news, so we won't look at that. RBPH. No. SJ. This is actually definitely a good. So this stock, I think, ran a couple days ago. Come on, give me larger time frame. Yeah, it did. So this looks like, yeah, this ran a couple days ago, but we see, we plot out some daily resistance lines. It comes up and it tests this daily resistance line. We'll look at it. 1, 2. That looks like one. So these two I plotted because that's what everyone's looking at. But yeah, it pops up and it holds this line. So this was a good buy, but I mean, this is at too early in the morning, too quick of a move. But it definitely respects these lines. And again, like I said, you get a bounce here, a move up, you get another bounce, right here, but it's nothing but just a quick scalp, and it falls through. And this stock was never able to kind of get headwind. And this is, your line in the sand. I mean, below this, if it never breaks through it, you can see it tests here, tests here, tests here, and never breaks it. So, but this I like to call it like the second day fail. So yesterday was getting some insane volume. The first candle was getting, quarter million. And even in pre-market, you were getting, 10,000, 20,000. And today you had nothing. So it goes up, and then we have a high here for the pre-market, and then you want to short here. But in my opinion, this was just going to fall because if you look at this versus here, these candles are like a lot more full. I mean, it looks a lot better than this. This is because there's no volume. I mean, look, there's 100, 100, 100, and it's probably traded. It's probably a computer trading to the same person. And there's no volume whatsoever. No one is trading this stock, which means it's just going to dump. I mean, this is really easy to see. I mean, no one is trading anything. And it's at this 10 area. This is so illiquid, so spready that it was just going to dump at open, and that was really easy to see. I mean, yesterday again, you were getting 10,000, 15,000 volume per candle. Now you're getting 100, 100, 100. And then it just dumps from 1040 all the way down to 950. And this was 100% just a stress-free trade. I mean, this is easy to see. When a stock can't get headwind, people are just going to be selling. And then the next day when they wake up and it hasn't gapped up, they're like, all right, I'm just going to dump this at open. And that's what happened here. And even at open, I mean, what? There was only 20,000 as opposed to that 250,000 yesterday. Skills. I don't think there's much here. I think this is, well, I guess we can look at this. So, again, this was a continuation play. You see this. Mark that down. Daily chart. I think I plotted some daily charts here. Some daily resistance lines. But what we have to look at is right here is, the 5 minute. This is right here, this huge green wick, and then followed by this red down. This is identified as a supply zone. And what I mean by that, so if we look at so what they have here is it has the top of the wick and then the body of the red. Let me see if I can find a better one. Demand, supply, demand. I guess people draw it a little bit differently than I do. But from what I've learned is you draw the top of the green wick down to the body of the red. So this is your supply zone, which means that, so essentially when stocks are moving like this, buyers and sellers are at an agreement the whole time. And then once it reaches this zone, there's a lot of supply up here. So a lot of people are selling. So every time it gets into here, you short. Up here, short. And today, you see a nice consolidation, and you see it move up, but it was never able to eat through supply. There was not enough buyers, only sellers, and it fell right down. So, short here, you're risking above this box. So I mean, if you get in, you start scaling around 21.36. You just got, you're risking 40 cents for eventually like $1.50 move down. So that's just an example of a supply zone. VXRT. This is another good chart. This was today. We charted some daily resistance lines, but that's not what we look at today. What we look at is, you get a move up. We've seen this a little bit. This huge move up, and then this lower high, higher low here, and a move up. I wouldn't really call this a cup and handle. It's not very pretty. But one thing to look at is one of my favorite trades is one of my favorite ways to look at it is the front side and the back side of a trade, and we've kind of see like this U pattern, I guess you want to call it, or W pattern, that I've noticed. So it makes a high here, and it comes back down and it retests that high, but it never gets like enough volume, and then it just this kind of pattern, this U here, this W here that I've noticed, it retests here and it fails. So right here would have been a great short, especially with this. It's got 950 psychological resistance. That the whole and half numbers are, if it doesn't break over 950, people are like, oh crap, let me get out. And then a huge fail. It's this candle right here. This is a minute. The top of the candle 945 to 876. A 70-cent move, 60-cent move in literally 1 minute. So this was something I really like to do. I mean, if it can't break through that high, it'll dump. Especially something that's just moving on volume during the day. But it held up pretty well. That's just nothing but a day trade. This might gap up tomorrow. Who knows? But this would be an interesting level to look at tomorrow. The last one we'll look at is TIRX. So this is actually really interesting. This was a $100 stock last week. And all this was an IPO that was like a fake company sort of, and the same people were trading the stocks to each other. So essentially it was someone who was trading, like painting the tape is what it's called. So pretty much what that means is people are like, it can mean a few things, but someone is trading stocks, like they're buying and they're selling the same stocks. So they'll sell the stocks to themselves, and it's called painting the tape, which causes, which is manipulation. It's illegal, but it caused the price to go from 12 all the way to 100. And then they dump, say they had 3 million shares, they would trade with the same 100,000 shares, 200,000 shares a day, paint the tape, rise it all the way up to 100, and then people would start buying. Either they drop news, or they would offer shares to the public, and then they would dump their millions of shares onto suckers like me, retail Robin Hooders, and then they dump it. And literally, if we look, let's just do this. Time frame. You can see literally just fell. This is, I don't know who was buying here, but idiots were buying. People were like, oh, look, this stock's down 25%, let me buy. And then they were just getting screwed, and then just went straight down. And then it finally based around this like 12 area. And for a stock, for this to happen to a stock, and for it to stay up, tells me that the stock's not down. It's always gonna. It has range essentially. That's what. Doesn't matter what happens, what stock, what the fundamentals are. This stock has range because it was once a $100 company. It was once at 100, so this stock can move. And so this would have been a great idea to snag some once it found its bottom at 12. But that's definitely risky. But we can see here it gets insane volume. It moves up. And then it comes down, and then what is the one thing we notice? We see a higher low, a higher high. So now this is your out point. If it breaks under here, you see this curl, then you're done. You get out, but it doesn't. So now here's your pivot, and it moves up, and it never does. I mean, this is kind of an all or nothing trade, until it breaks here, and then you're just holding for more, and it eventually gets to 2260, and looking at this is right here. This is called exhaustion volume. Super extended. Right here, once we see this huge volume, it was bound to fall, especially on something like this where it's really not like it wasn't off news or anything. That is buyer's exhaustion. This is exhaustion volume, highest volume of the day, as opposed except for that 9:30. But this is when the top is coming. This huge extension. I mean, 3 huge green candles. And this is when you get out. And this actually would have been a perfect short. And then again, if you're on the other side of the trade, you're looking for the stock to make a downtrend. So you're making it to look. This is now your downtrend. So you want it to break through this line, and then you don't want it to break through this line. So once it makes this move up, you're like, okay, it didn't break this high. So actually, I mean, it starts here. So this is your high. Now this is your low. This is your high. So if it breaks through here, then it's going to keep going. But it doesn't. So it falls down to here. So now this, you want to break this line, but you can't get it above this line, which it never does. You can see how it, right here, it fails from there, and then it just sinks through. So again, what are you holding for? You're holding for it to break, this high. And you want it to break this low. It doesn't hold the low, and it keeps going down. I mean, there's no really point to get out until, you see, again, here, you can't let it break this line. It goes down. It doesn't. And you just keep holding for more. I mean, you're getting a six-point move off of that. But yeah, so that is the last couple days. Pretty easy the last couple days. I mean, these things are really easy to spot. But yeah, Tracer J.